Hi, this is Palmer, coming from ForexSwingTrading.com, where our job is educating traders. Today we're going to talk a little bit about sentiment analysis. Sentiment analysis essentially measures the positions of traders in a particular currency pair. And since 95% of traders lose money, it says that when a majority of traders are in agreement to go the other way. So it's a contrarian indicator. So for example, if let's say 60 or 70% of traders are long the pound yen, you would take a position short the pound yen, contrary to what the majority are doing. Okay, makes sense? There are a few problems with the indicator. First of all, there's no central exchange for Forex. Not like, unlike futures, S&P futures or stocks, there's no central exchange. So you're not really sure whether you're getting enough data to extrapolate, the overall forex market as a whole. The sort of the best solution to this is use data from large brokers like Owanda or FXCM. It's probably still not perfect, but it's as close to perfect as you're going to get. I personally like the sentiment indicator from Owanda better. I don't really like the one from FXCM. It's called the SSI, the Sentiment Speculative Indicator, something like this. The reason I don't like it is because it doesn't give you historical data. It only gives you what's going on right now. And I couldn't really find an edge with the one at FXCM. So the one at Owanda is much better. So let's go ahead and take a look at that. So if you go to the ForexSwingTrading.com website and you go to free resources sentiment indicator, this is what you have. I have the indicator on my website. So as you can see, you have two different indicators. One gives you kind of several different pairs at once, and this is what's going on today. I think it's updated every 20 minutes. As you can see, there is a bias on the US dollar yen. 71% of traders are long. So the blue is long and this sort of orange is short. So I'm looking for sort of 60% or above as sort of a indicator of what to do. So again, 71% of traders are long, so I'm going to want to take the opposite side. So I want to go short the US dollar yen. Let's see, we've got, I think this is gold. We've also got the US dollar Swiss franc as viable trades. And again, you can also go up here. This has more pairs. Okay, so let's take a look. For example, let's take a look at some of the historical data. Let's do 1 year. Okay, so this is a year for the euro yen. I don't know if you can see that, but let's see. Okay, so here this is back from the 13th of November of 2013. As you can see, the long positions were 28%, which meant that the short positions were 72%. Okay, so again, this is a contrarian indicator. So 72% of the traders were short. So you want to be on the long side. And as you can see, price rallied all throughout November and December, and the short positions remained at about 60 to 70%. Okay, so as the market moved up, the retail investors were selling into this market. What this means is they were trying to call the top. Okay, so retail investors, dumb money as they call them, will oftentimes try to call tops and bottoms, and they'll sell when they should be buying and buy when they should be selling. Okay, and that's how the sentiment indicator works. Let's take a look at another pair. Okay, so this is the year-long data for the pound US dollar. Again, you can see that the majority of people were short, sort of 60 to 70 people short, and as they shorted the price line kept going up. Okay, so you obviously couldn't use this to time the markets by itself. You would use technical indicators. So on a pullback, if the market, if the sentiment indicator was saying most traders are short, and you got a pretty good pullback, you would look to go long. Okay, so yeah, I mean, as you can see, this is for the most of 2000. Since September of 2013, sort of 60-70% of traders were shorting the markets, and the price just kept rallying even up till now. Into May of 2014. Okay. So what are some of the advantages of using sentiment indicator? Again, this is another indicator that is not correlated to price. It's looking at the positions of overall traders. It gives you the overall sentiment of the market right now. This can oftentimes, it can be more accurate than seasonals. Ideally, you want to get all of these indicators, these non-correlated indicators, going in the same direction. I call this stacking probabilities. So you can use seasonal sentiment, seasonal indicators, technicals, volume spread analysis, cycle, and time. You're usually not going to get all of these, but if you get sort of 5 out of 6, or I use 9 different points. So if you get sort of 6 out of 9, you're looking pretty good. Okay. So again, this is called stacking probabilities. These are all non-correlated indicators. So unlike this is different than if you, for example, use an RSI, a stochastic, an MACD. These are all correlated price indicators. So this way, you're looking at all different things, and you're getting a more complete picture of the markets. Anyway, I hope that this has been helpful. Thank you for listening to this video. Please come and visit us if you enjoyed this, felt like you learned something, or if you just want to use the sentiment indicator. Please come visit us at ForexSwingTrading.com, where our job is educating traders. Thank you for listening, and happy trading.